This is what has happened. Now, in next 3 4 months, on all these steps, in all these things, more steps will be taken. I'll explain you my reasoning now. I explained it partially. Exports is something on IT services as well as manufacturing. India has an advantage, means, and there is a tailwind. Services, we are very strong. We are 30 years old history now, $180 billion of exports, more than Saudi Arabia's oil exports. We are very, very strong over there, and we are still doing very well. So that is a sector which has to be there. Means it's part of any index. It's 20 30% of India's corporate profits now. Uh, One cannot afford to be out of that in any long-term portfolio. So there has to be representation over there. On the other side, manufacturing exports, where Gland will qualify, or some right now stocks are not there over there, but more stocks are there in representing that space. But that space should have representation, because that's the future. In my opinion, India will have lot of manufacturing exports 5 to 10 years out. So any portfolio which wants to create delta over next 4 5 years, that has to have some representation over there. So we had very tiny representation, so that we are correcting. So these two things are definitely going to correct. The third thing, uh, which is which is important, is smallish positions. We had lot of tail stocks which we have reduced to consolidate positions in some of these names. The fourth thing is financial services. Now, within financial services, we had Max, then ISEC, and CDSL. Now, Max is a 3 4% weight in the portfolio. Uh, we wanted to increase that weight, so we have added SBI Life. Why would somebody increase weight in financial services? Two reasons. Uh, Financial services again will have very largest weight in the index, any index. Means it's India's corporate profit, they will have 20% weight kind of number. So one has to have substantial position over there. Second thing is, one should be in that space, one should be at a place where growth is more than the industry. So we believe SBI Life and Max both have growth more than the industry in the insurance business. So so take a position over there. These guys are reasonably valued. The the second pillar of that financial services weight is capital markets, banks, or what. I'm talking of financial services, not banks. Financial services insurance, the second part is capital markets. So CDSL and ISEC we had. Now CDSL is a means great business. ISEC is a traditional broker like us with a digital landscape, but they are losing market share every month. So, and that market share is getting gained by Zerodhas and Angels of the world. So growth will be very, very high over there in those kind of companies. So we have thought that that capital market thing will be split between not two but three people. So Angel, ISEC, and CDSL, all three will be there within the capital market. So financial services, there are two distinct places: insurance and capital markets. Insurance will be represented by these two companies, and capital markets will be represented by these three companies, which Angel already has come. ISEC and CDSL was there. ISEC, we are reducing it. So we shall be playing growth through Angel, stability through ISEC, and CDSL again is a play on growth, is a very immediate play on growth. So these three places will be done by that. So if I take all these at account, that is of roughly 40 to 50% of the total portfolio, and that process is on. Means we shall be doing it in next 3 4 months.